This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending October 31st, 2020. Our question this week is, why has the stock market struggled lately? The answer will be provided later in the video. This week, the market was down. The Dow Jones Industrial Average decreased 0.59% on Friday and was down 6.47% for the week. The S&P 500 decreased 1.21% on Friday and was down 5.64% for the week. The Nasdaq decreased 2.45% on Friday and was down 5.51% for the week. Looking at the week, we can see that there were 3 down finishes versus 4 up finishes for the indexes. All were down on Monday and Wednesday and Friday. On Tuesday, only the Nasdaq was up, and they were all up on Thursday. The new unemployment claims were 751,000 versus 778,000 expected. Continuing unemployment claims were 7.75 million. The Senate adjourned until after the election, which means that there will be no stimulus bill before the election. U.S. capital goods orders increased by 1.9% in September. Coronavirus cases surged in the U.S. and several companies announced earnings. Microsoft reported better than expected operating income. New unemployment claims, suspended stimulus negotiations, U.S. capital goods reports, new coronavirus cases, and corporate earnings reports are news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, one of the top powers to be is Congress. Politicians will do what they must to drive the stock market up. However, as it has been for the last several weeks, sometimes they want to suppress the market. They want to keep it from going up. Congress has delayed a stimulus deal to keep the market down. Which brings us to our question of the week. Why has the stock market struggled lately? The market has struggled because there is no stimulus deal and coronavirus cases are going up in the U.S. and in Europe. The market will react positively once a stimulus bill is announced. A high stock market is deemed as beneficial to the president. Democrats do not want to give the president a perceived win before the election. Never mind that the American people are in desperate need of assistance because of the pandemic. Do you own any stocks? If not, why not? Are you afraid that the market will continue to go down? After all, it just experienced its worst week since March. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up or down or sideways. How do I do that? I apply the Southside Trading Strategy. You can learn more about the Southside Trading Strategy at SouthsideSchoolOfFinancialFreedom.com. Here is my trading watch list from the week ending October 31st, 2020. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was the gold ETF, ticker symbol GLD. It's at the bottom of the first column. It decreased by minus 1.34% for the week, but it was up on Friday 0.46%. Every stock and ETF on the list decreased this past week. GLD decreased the least. GLD has outperformed the S&P 500 ETF SPY this year. However, please be aware that gold and silver, that's the metals markets, are the most manipulated markets in the world. Big banks and the government do not want the price of gold and silver to go higher. Even though it is illegal, big, big banks spoof the gold market all the time. The government mostly ignores the fact that the big banks illegally manipulate the gold market. They only occasionally issue them a small fine. I did not trade GLD this past week, but I have traded it and generated cash flow from it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? As of October 31st, 2020, my portfolio is outperforming the S&P 500 index ETF SPY. Year to date, my portfolio is up 15.57% versus 1.14% for SPY, a difference of 14.43%. I am beating SPY by 14.43%. This week, equities, including puts, calls, and ETFs, make up 92.39% of the portfolio. Cash is 7.61%. The cash flow generated for this week was 1.35% of the portfolio account value. The account value changed by minus 3.95%. Meanwhile, S&P 500 ETF SPY changed by minus 5.56%. I sold option contracts on 8 positions this week, 5 calls and 3 puts. That ranged from $116.70 to $491.69. You can get more details, including the total dollar amount of cash flow for the week, on the website SouthsideSchoolOfFinancialFreedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the SouthsideSchoolOfFinancialFreedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales: How a Small Fish Feeds Makes Money Off Wall Street by Melvin C. Dunia, available on Lulu.com and Amazon.com. Please like, share, subscribe. ADOS, ADOS.